Top-down analysis became easy once I understood this one thing. I'm going to be showing you how to properly do top-down analysis in a very simple way. The problem is most traders overcomplicate top-down analysis, and that's why they often get confused because you keep jumping from one time frame to another, and before you know, you're all over the place. Well, that ends today because I'm going to be clarifying everything for you. So make sure to subscribe if you're not subscribed already, and let's get started. So we're going to be talking about how to do top-down analysis. How to do top-down analysis. Most of you are struggling with this, especially if you're new to trading. But how do you do top-down analysis? Let me delete these things first. So top-down analysis is very, very important because it's what's going to help you identify like the overall direction of the markets, the big picture of the market, so you can see everything clearly. So before I show you how to do technical analysis, technical analysis in the form of top-down analysis, is you first of all need to know what not to do. So what should you not do? What I usually see people do is, for example, let's say I trade on the 15-minute time frame. So what most people will do is if they want to do their top-down analysis, they'll start going to like the monthly or the daily. Like some people go to the monthly like this and say, okay, where's the direction of the market from here? Then from monthly, they'll go to the weekly and then look for another direction there. Then from the weekly, they'll go to the daily, and then they'll just keep on going down till they get to the 15 minutes time frame. I can tell you that if you do that, you're going to get confused because that's not how to do top-down analysis. Because it's top-down, you're going from higher time frame to lower time frame, doesn't mean you have to use all the time frames there. Right? Doesn't mean you have to go to 12 months, 6 months, and then start going all the way down to your 15 minutes. That's not how it works. So in order to do top-down analysis properly, first of all, don't do that one I just showed you, right? That's the bad way of doing it. You're going to get confused. The reason why you're going to get confused is because the time frames are going to give you different trends. For example, if you go on the 1 month, on the monthly time frame, you can see you're in a downtrend, right? You say, okay, we're in a downtrend on a monthly. If you go on the daily, you're in an uptrend, right? And then if you go to the 4 hour, where's the 4 hour charts? If you go to the 4 hour charts, what are you in? You're in like an uptrend slash sideways market. Then if you go to the 1 hour, if you go to the 1 hour time frame, price is just going sideways, right? And if we go on the 15 minutes, which should be your entry time frame, price is in a somewhat of an uptrend, sideways actually. So when you're doing top-down analysis, do not do that. You're going to get confused because okay, the monthly is on a downtrend, the daily is on a uptrend, the 4 hour is going sideways. Okay, so which one do you follow, right? So the purpose of top-down analysis is to identify your trend and know the big picture of what's happening with market structure, right? So understand what's happening on the big picture, so that you can go on the lower time frame to enter a trade. So to do proper technical analysis or top-down analysis, here's how you do it. Now, this depends on what type of trader you are. You know, we have three main types of traders. We have scalpers, we have day traders, and we have swing traders. So we have scalpers, we have day traders, and we have swing traders. Depending on what type of trader you are, will depend on what time frame you should be using. Me, for example, I'm a day trader. I only use the 1 hour charts and the 15-minute charts. Rarely will I go to the 4 hour charts. Rarely. Right? Swing traders, you can expect them to go on the daily time frame, to mainly use the daily time frame and the 4 hour time frame. There's another type of trader, which is the fourth type of trader, that I think they call those ones the position trader. Those ones are like more long-term, like investors or something. They can use the 1 month, the monthly time frame or weekly time frame, right? Or daily time frame. Well, scalpers, if you're a scalper, you have no business on the daily time frame. You have no business on the 4 hour time frame. I think the max you can go for a scalper is the 1 hour. That's the max you can go. So it depends on what type of trader you are. Are you a scalper? Are you a day trader or are you a swing trader? Are you a swing trader? Me, I'm a day trader. Right. So I always stick to the 1 hour and the 15 minutes. Sometimes I'll go to the 4 hours. Sometimes, rarely. So to do top-down analysis, so the way you can apply it to what type of trader you are, swinger, day trader, or scalper, here's how you do it. So you need to have two things. The first thing that you need to have is,
did you know that one of the biggest problems that traders face is lack of capital? Because it's very difficult to try and grow a $30 or $50 account and make a significant amount of income. But that's not a problem anymore because of the sponsors of this video, FundedNext. With FundedNext, you have the ability to trade larger capital like a $5,000 account, a $50,000 account, and even up to $300,000 account to trade with. And the crazy part is, with as little as $32, you can get a $5,000 account to trade with. And that's not all. When you pass the challenge, you get refunded the amount that you used to pay for the challenge, and you get to withdraw any profit you make from the account. So basically, you get your money back plus the money you made from trading the account. So instead of trying to double a $30 account, you can just get a $5,000 account and make 5 to 10% of that, which is already like $250 to $500. So if you want to get an account with FundedNext, make sure to use the coupon code FNDANFX and click the link in the description below to get an account.
your higher time frame. Let me write it down. Higher time frame. Higher time frame. Yeah, just your higher time frame. I'm trying to think if there's another word to add to that. But yeah, higher time frame. What word would I use for this? I think I had the word in my head just now and just skipped. So basically, what I'm trying to say is you should have a time frame where you use to identify your trend, right? It's higher time frame trend or whatever, right? And then you should have your lower time frame, and this would be for entries. Okay, so let's do it like this. The higher time frame is to identify your trend, and then the lower time frame is to look for entries. So you should have one higher time frame and one lower time frame. You can have multiple lower time frames depending on what's your main time frame, right? But also, let's just say it like this. Let's say main, right? Main higher time frame and then main lower time frame. I think this makes sense more. So you should have your main higher time frame and your main lower time frame. What I mean by that is you can apply this to these three type of traders, whichever trader you are. Main higher time frame, main lower time frame. Now let's say I'm a day trader. What's going to be my main higher time frame? My main higher time frame is going to be the 1 hour chart, right? It's going to be the 1 hour chart on HR. Sometimes I might go to the 4 hour if things are not too clear, right? But my main time frame for identifying, for doing my top-down analysis of my main higher time frame, for identifying the trend or market behavior or market structure, would be the 1 hour time frame. Then if I want to look for entries, I go to the 15-minute time frame, right? I mean, I maybe sometimes go lower than that, maybe like a 5 minutes, right? But that's not your main time frame. Your main time frame is the 15. So when you're backtesting, when you're backtesting your strategy, you should be backtesting from your 1 hour and 15 minutes. So what you do is you go on the 1 hour chart, identify your trend, and you go on the 15-minute chart and look for your entries. It's as simple as that. Top-down analysis isn't a hard thing. You guys are complicating it because you're going to all these useless time frames that doesn't suit your trading style. If you're a scalper, there's no point going to the daily time frame. If you're a day trader, there's no point going to the daily time frame because day trading is you enter here, you close it, you're off, you're closing your trade by the time the day ends, you're done with trading. You're closing that trade. For example, that's how I trade because I'm a day trader. If I buy here, I'm closing here. Right? I'm closing there. The only occasion where I would hold the trade is if maybe my take profit is like here. I say, okay, maybe tomorrow to just go and hit the take profit. Right? That's the only occasion where I'll hold the trade. Or, okay, the second occasion is I enter a trade here. My take profit is here, but price is somewhere like here. Then I'll just wait for it to hit. The next day is gonna hit. Or maybe come back for break even or something. Right? So I'm not holding it for like 2 days, 3 days, 4 days. That's swing traders. If you're a swing trader, that's when you hold trades for like 3 days, 4 days, 5 days. All right. But I'm a day trader. I'm in and I'm out. So by the end of the day, I'm either out by the end of the day or the beginning of the next day, I'm out. All right. So there's no need for me to go on the daily time frame because I'm just looking for the move to happen in a day, in just 24 hours. I'm looking for the move that happens that day. That's what I'm looking for. I'm not looking for multiple days of action. I'm looking for just that day. I'm out. The next day, I look for another entry. Right? But swing traders, they could enter a trade here, stop loss here, and their take profit could be like all the way up here, which is gonna take you multiple days to get there. It's not gonna just get there in one day. It's gonna take you multiple days, maybe like 5 days, 3 days to get to this high. So then they hold the trade longer, and in that case, you can go to the higher time frame to see if the market structure or the trend suits you suits for the price to get to this area, right? But if I'm a day trader, I'm only looking at this short movement. So if I go to the 1 hour charts, I'm looking for the market structure to get me from here to here, and I'm done. If you're a scalper, you're looking for you're not even looking for this entire move. If you're a scalper, you're not even looking for this entire move. You're looking for maybe let me delete this. You're looking for maybe here to here, or maybe here to here. Just a short move, and then you're done. So there's no point of you going to the daily time frame or whatever time frame that you're going to that's past the 1 hour if you're a scalper. There's no point. There's no point. All right. Because you're looking for the short move. You're not looking for the long term move. So if you're a scalper, the time frame you should go with is um the max time frame for you is 1 hour. I don't even think you should be going to that 1 hour time frame. I mean, you can go there to like get the buyers for the day, then maybe drop to the 15 or 5 minutes or 1 minute time frame. If you're a day trader, stick to the 5 minutes, 15 minutes, and 1 hour charts. Sometimes you can go to the 4 hour charts if you're looking for a bigger move. And then if you're a swing trader, you're mainly going to be on the 1 hour charts, the 4 hour charts, the daily charts. There's no point going past that daily chart if you're a swing trader. There's no point going past the daily. After the daily is what time frame? Weekly. There's no point of you going to the weekly. All right. So this is how to do top-down analysis. This is how I do top-down analysis. I go to the 1 hour chart, identify my trend, and I go to the 15 minute chart to look for my entries. Simple as that. If you guys want to learn more, you want to learn how I trade, and you want to learn how to probably do this, I teach my students in my Market Maker Blueprint course. More things actually, more than this. This is just the tip of the iceberg. So if you want to learn how I trade, you want to learn how to trade highs and lows, how to be a day trader, even if you're a scalper or a swing trader, um, click the link in the description below to get the course, and I'll see you guys in the next video. All right, peace.